When we dispose of plant assets, there are certain steps that have to be taken to remove things from our books and to bring everything up to date. So the first thing you're going to do always is update depreciation to the date of disposal. If everything was disposed of on the end of the month or the end of the year, it would be easy, but of course we know that doesn't happen. So we have to bring it up to date with a journal entry to make sure that that account is correct. And then we're going to get rid of it. We're going to dispose of the thing. And first thing we're going to do is record the cash received or paid, depending on what we're doing, and then get rid of the accumulated depreciation. Since accumulated depreciation has a credit balance, you're going to debit that account. You're also going to credit the asset account to get rid of that from your books, and then record either a gain or a loss. We get credit for gains and we debit losses. Look at your book value and remember how to calculate book value. Book value is the original cost minus the accumulated depreciation. If the cash that you get is greater than that book value, you're recording a gain. If the cash is less than the book value, you'll record a loss. And if you get what it's worth, there's no gain, no loss. That's this step here. It's easier to see if you look at an example. The one they use here is discarding a plant asset, which means we're just getting rid of it, putting it up along the road for somebody to take away. I have a machine here that costs $9,000, has accumulated depreciation of $9,000, so it's not worth anything at this point, and it was discarded on June 5th of the current year. Company is depreciating the equipment using straight line method over 8 years with zero salvage value. We're getting rid of it. It's fully depreciated. It's gone away. So just debit your accumulated depreciation and credit your machinery. You've wiped out both accounts. No cash was involved in this one. Just dumped it. In this case, it's a little bit different. In this case, the book value is $1,500. It cost $8,000, has accumulated depreciation of $6,000, so there you know it was worth $2,000, but it was discarded on July 1st, so you have to bring the depreciation up to date right away on July 1st. You have 6 months of depreciation to record. At $1,000 a year was 8,000 divided by 8. That would be 6 months would give you $500. So now your accumulated depreciation account will have a balance of $6,500 and your book value is $1,500. First thing you're going to do is get rid of the accumulated depreciation, debit that for the $6,500 balance. Then I credit the equipment for whatever the balance is there, whatever we paid for it, and the difference tells you if there's a gain or a loss. There's a $1,500 difference here, and it has to be on the debit side, so it's a loss on disposal of equipment. The company got rid of the equipment and took a loss. In this case, they're selling it. And when you're selling something, you still have to do the same steps, but now you've got some cash involved. So they have some equipment that costs $16,000, has accumulated depreciation of $12,000. Annual depreciation is $4,000 using straight line. And they're selling it on March 31st, so you have 3 months of depreciation to bring up to date to record. If it's $4,000 a year, then 3 months of that would be $1,000, 1/4 of it. Debit depreciation expense, credit your accumulated depreciation for $1,000, and then don't forget to add that $1,000 into the 12 of the accumulated depreciation to get your new balance of $13,000. Now the book value becomes $16,000 minus 13 equals $3,000. They're selling it for $3,000, so there's no gain or loss. Debit your cash for the cash that you get, debit your accumulated depreciation for $13,000, and credit your equipment for the $16,000. No gain, no loss. In this case, they only get $2,500 for the equipment. It's all the same information, still bring your depreciation up to date. The book value is $3,000, subtract the $2,500 cash received, you know right there that there's a loss of $500. You're getting less than what it's worth. So you debit the loss on disposal. If there was a gain, this is not cooperating.